What is up, traders? I've been gone for a while. I've been on vacation this last month. Hope everyone else is having a good summer. I'm back, and so I have a lot to talk about this week. Lots happened over the summer. I mean, just today we made a new all-time high. If you've been watching this right here, this is a nice playback of the Dow Jones Industrial Index. I like to sometimes just watch it and see what patterns I can recognize. Let's start to jump in since I've given enough time for people that care to jump in. Let's look at what we got going on this week. So, SPY, new all-time high. And is it that surprising? I'm not surprised. I mean, I've learned from many, many years in the past that you just got to let this thing go. Today, I was talking in the Discord about how I feel the need to take some profit on a day like today. And I did in one position that fit the strategy, but you just got to let things go and not overthink things. And so it's been very, very interesting to watch over the last couple of years where people are finally starting to understand what a bull market actually is. And of course, this thing can end at any point, but all of the FUD, the fear, uncertainty, and doubt that has been pervasive in the media, I hope that I've gotten out there to people that it doesn't really make any money trying to pick the top of the stock market. It just doesn't. I mean, one of these days, we're going to have a significant correction, and by that I mean about 5%. It's been rather amazing, and it makes me a little nervous. I'll be honest. The last little bitty correction that we had was right around here. We only had a 2.5% correction in the month of August. The month before that, in July, we had a correction of, again, less than 5%. 3.7%. We just haven't seen a big pullback that you really want to see to consider it healthy. I mean, when you go and look at the monthly chart of the SPY, it looks like a bubble. I mean, but you just can't overthink it. You can't really try to pick the top because it's just going to keep on going. You got to make sure that you're hedged, though, and you're not too overly exposed. I mean, that's the only thing that I can say that people need to really pay attention to. If you got long-term positions on Just let them go. And then when the market finally does start to turn, then you can start looking at those puts. That's what I've said all along. And I'm going to steal a little bit from the Tasty Trade folks. Now, if you're not familiar with who Tasty Trade is, that is Tom Sosnoff and what's his name? I think Batista is his last name. But they have a channel. It's tastytrade.com. They do a live stream every morning, far more than I do. And what's really interesting is they bring up a lot of these different market measures. And this is where they actually take statistics that their research team, they have a whole team that is able to analyze what is going on in the market based on historical patterns and things like that. They mainly focus on option
Let's take a little
trade,
selling,
premium
sneaky
selling.
peeky.
But they
Yesterday,
bring
the
up a
S&P
lot
500
of very interesting little tidbits.
Closed just a few points shy of all-time highs.
In their weekly newsletter.
God, I thought
they talk about
it was the Nasdaq that closed at all-time highs,
and where it should be.
With the VIX closing at 1697,
this is something I've watched for most of this year.
We expect when the market makes
there's a real interesting little statistic in here.
All-time highs. What should we expect with volatility? What should we expect with volatility?
The volatility should be on its lowest.
And they took a look at about almost 8,000 trading days.
Yep. So what we did was, and again, this is a little different than the last segment.
How about that?
But what we're looking at is a couple of statistics today that are just very interesting with respect to where volatility is trading and what the market does when it makes all-time highs. Looking at the SPX and the VIX from 1990 to
present.
Actually,
I was turn them off because
so we're really looking.
I'm already talking about their slides for them. So they did basically 30 years of data, and what was very interesting they came up with is that 8% of all these trading days were all-time highs in the last 30 years. Now that seems like a lot. I mean, 8%. I mean, 1 in 12. It's pretty crazy, actually. There was, what was it? Number of all-time high days, 646. But the largest streak with no all-time highs was 1,802, and that was following the dot-com crash all the way to May of 2007. Yeah. That's a big time. That's 7 years to try and make a new all-time high. I'm sure there's opportunities in there, but we're getting used to making all-time highs on a regular basis. But we all know deep down this is not going to go on forever. We just can't put a time on when it's going to stop. So I found that interesting that you need to subscribe to them and catch them if you are interested in some interesting things, especially if you're an options seller. What I have learned about iron condors, strangles, credit spreads, I've learned from watching their videos. Mike's Whiteboard, if you search for it on YouTube. Yeah, this is a few years old, but it has a great base of information. A lot of people are asking, where should I start when I'm trying to learn about options and things such as that? And this is a great place to actually start. Everything about options, the components of options, the Greeks, different strategies like calendars, and it's just a wealth of information done very, very well. And I took the time a few years ago when he started releasing these, 2006, several years ago, and it really learning to the next level. I mean, I understood what I learned about option sellers. For instance, they optimally try to sell around the 45-day mark to capture the greatest decay, the greatest theta decay. And then they try to exit these positions at either about 50% or 21 days. But that key there told me, well, if I'm buying options, then the worst time for me to be buying them would be at that 45-day expiration. I need to go further out if I'm going to do it. Or less that I use it more, but for that gamma acceleration, buying short-term options. But again, this was back in 2016. This was before Robinhood. This was before Weekly options really became a thing. So pretty much all the research is going to be on monthly expirations. Yes, they do exist. By the way, there's other than weekly options, but a lot of this research is going to be based on that for more longer term options trading. So all that's very interesting. Highly recommend looking it up for your own education. I heard a quote today that I liked. It was, where did I put that? Yeah, each one teach one. And that's what I've been trying to do. I'll plug my social media right now for those that watch it now. And I started a Discord last year because I wanted to have a community of traders. There's tons of scams. There's tons of charlatans out there that charge you for information that you could get freely, or signal services that are fly by night, and they purport to make people lots of profit. But at the end of the day, if you're relying on a signal service, are you really achieving your financial freedom? No. And so I just wanted to bring a bunch of actual people trading on a daily basis together to share ideas so that I can help them, and also I can get ideas and feedback from them. Like I never know when people post great stocks in the Discord all the time on a daily basis. I'm going to look at it. If I like it, I'm going to take it. If I hadn't had these great minds helping scan for these opportunities, I would miss them. It's a win-win. It's a win-win. I'm really happy with how it's come along. So make sure that you, there's going to be a link in the description, all that good stuff. Make sure that you join up and see that. Okay. So let's see. I want to be a little authentic here. And if you really follow my postings on TradingView diligently, you know that I've been rather bearish about Bitcoin. And I'm going to be honest, I've got some ego invested in. That's like one of the worst things you can have as a trader. It really is. But I've taken a thesis. I've taken a fundamental perspective on what I think about the crypto market. And it's been in conflict to some extent. And how it's been in conflict is this. One of the reasons that I've been very bearish on cryptocurrency as of right now is because of this. The anatomy of a bubble. And we see this all the time. We see this in stocks from GME. We see that I don't even need to make a list of it. You've seen these stocks. They happen almost once a week where they run up. I get about a dozen, direct messages from people asking me what I think about this stock. I think it's going crazy. That's what I think, and I think you shouldn't put your money into it. But what was the stock today? SPRT. Oh, this is a daily chart. I know that some people in the Discord have been got into this on a few days ago. People have been talking about this all week, and it's really, oh man, it's crazy to think that if you look at something just at the end of July, it was in single digits, and then you see this kind of a movement here, and you see this kind of a run up, and this right here immediately turns you away from it. It's like, oh, this has gone too far. This has gone too far. It can't go up any more than this. It's already doubled in the span of a few days. What more can it do? That. But of course, that's a big red bar though. But these things happen. They're not predictable in how they will play out, but they are predictable in that they all pretty much end the same way. And so at the risk of stepping on the toes of some crypto maximalists, a lot of them who are very close friends of mine, I've known for years, myself being a crypto maximalist, in theory, when I looked at this being Ethereum in particular, this run up, I can't help but think, wow, that looks very, very, very familiar. These patterns of human behavior, around price action. Very, very common. But again, that's not to say that it couldn't go up for another leg. That's why you can't really pick a top. You just can't. And so we had this big sell-off in crypto. It surely dented a lot of that bullish, bubbly momentum. And so if I'm looking at how these things play out, in theory, just in theory, if I'm building a thesis about how I want to have a sentiment on something, this is what I am operating under. And so we are getting close to, we have the media attention, the enthusiasm, the greed, and the craziness. And then we had this boom, this sell-off here. And what I'm operating under is that we are in this return to normal phase, because I've seen some FOMO for people buying this recent bullish trend over the last couple of weeks. I'm also seeing a lot of arrogance. The people that were bearish on it. We're going back to high. We're going to take it to over 9,000 Ethereum. We're going 6 digits in Bitcoin, all that good stuff. I mean, people are getting excited again. I wish them the best if they've got a lot tied up in it, but you just don't know. So you have to come into it with a thesis. Their thesis is fiat money is going away. I'm paraphrasing. And crypto is going to be the only real money. It's going to go to the moon. Maybe. Or it could play out like this. I still believe that there's greater upside to the downside. I still believe that the risk reward is greater in the downside, because when these things sell off, they happen very, very quickly. The run up happened quickly, but this would not be the first instance in crypto's history, nor will it be the last, no matter what happens now, that mass psychology pumps it to incredible levels and it falls off. And it tends to do it quickly. And this is sort of what I've been looking to happen. This is an example of what happened in 2018, where you have the big run up and then the sell off. And what I really wanted to see was a potential 50% pullback, because that's what I base a lot of things on. And in Bitcoin, what ended up happening was we got to that level. We definitely got to that level right about here. But the week last week closed above it. It's still bullish. And there's a lot of conflict in the charts too, because another thing that I espouse, technically speaking, is to look at daily Ichimoku breakouts. And I cannot deny that when price got above the cloud here, momentum was getting out here, it is a bullish trend. It is. Definitively, according to the theory of Ichimoku breakouts, you have the breakout of the cloud with price, and you have momentum coming out. So you do have to acknowledge that, even though I have a wider view that this could sell off. I basically do not think, could be wrong, humble enough to say it, I do not think we will make a new all-time high in this cycle. Anything could happen, but I have to operate on a premise. Just as the people that are long-term hodling, super bullish, are operating under the premise that we are going to go up to 100, 300,000, whatever is going to make them personally very wealthy. This is my premise. And so I've been looking for opportunities to express this thesis, and we got one. And it held for a few days. Let's take off Ichimoku right here real quick, and let's look at the retracement level. So round about the time that we got up to this level, I started looking for bearish setups. And on the lower time frames, it did set up in that way. There was a spike that I liked that happened, and there was a breakout. But even though it gave a very short-term pullback, it broke above it. Now, I still maintain my thesis. And that I'm going to, as I said when I started talking, I'm going to be authentic. That's actually worked against me because last night something happened. Now, notice how this level is a level that I look for. It's the 50% level. It broke it. And it broke it pretty solidly here. Broke it here as well. But it really broke it. And then pulled back on this bar, the 26th of August, to hold it. I even received a notification of this spike right here through TradingView. I have it set up to notify me when these spikes happen with my indicator. And I passed it up because the reason I passed it up was because of this localized price action. Because the trend that let it break the level, well, it wasn't quite where I wanted it to be. It's there, and it may work out, but man, choppy markets are just really, really difficult. But if this works, this would have been the launch point. And so right now, it has broken the resistance. It has come back to test it. There was a setup where one could have taken a very low risk trade. And by the way, join Discord, send me a message if you want this. I have a public release of this the spike alert here right here. All it's doing is capturing these really volatile bars where you have, say, this little bloop, breaks lows and then closes back inside the consolidation. That's all it is. Nothing fancy. I'm not going to sell it to anybody. You can do it yourself. But this just helps find them, let you know when something really important is happening in price. It comes from being stopped out on trades like this, where, say, someone went in a breakout short and it popped up. Don't want that. So what one could have done is taken the entry when it came back to that level there, and with a stop just below that low, you would still be in this trade. And the beauty of it is, all you needed to give it was about a 1.5% risk, a stop, 1.5%. It comes down, stops you out. You can cry about it, but it is what it is. But the goal here, is to be able to not only take it for that 3-to-1, but once you have that great entry, maybe take it up to the high here. Now you're looking at a 5.1, and maybe you are a super long-term hodl bullish person that thinks that it's going to go up to here. That's a 24-to-1, and maybe you think it's going to break the high and go to 100,000. Well, if this was the pull to hold, and it may or may not be, this was the opportunity to get in with this much risk. And the best part about it is, if you were up on this trade right now, you could take profit now. Take about half your position off, make it a free trade, and then you don't care. This is what I've been, even though I don't practice it because I let my bias get in the way, having a confession here. What I preach to people is low risk, define risk entries to get a trade started, to get into something that you maybe want to be in already, and you have your risk defined. The thing that kills people so much is the bag holding. That's where you get into something and you like it. Yes, it leads to ruin, and it can let people stick with something until it comes back, diamond hands and all that good crap. But I just see it destroy so many people, even the best traders. And that's an example I wanted to bring up. Who's heard of Bill Ackman? He's one of my rock stars. Some people that follow baseball, they have their baseballs, football. My professional athletes are the big name hedge fund players, the people that are in the market wizards. Those are the people that I look up to because they've achieved great things. But they're still human beings. They're still traders at the end of the day. They just have more zeros attached to what they're dealing with. And they still make mistakes. Bill Ackman, back in 2012, he made a disastrous short on Herbalife. That got to be very, very public. He lost billions of not just his money, but other people's money, because he was convinced that Herbalife was a fraud, and this is what he put his money behind, and he stuck with it even as it went against him. It's a very hard thing to do. That's not his only one either. Valiant, which was a pharmaceutical company, he took a lot of calls and went on CNBC very publicly. This takes a lot of guts to go on publicly and defend your loser. He lost $4 billion in Valiant as well because he was long this company. And now in hindsight, we can see it was obvious that the company, it wasn't fraudulent, but its business model was horrible. It was just buying companies up, making great money on these pharmaceuticals, but putting no money into research and development. And recently, SPACs, special purpose acquisition companies, man, he blew up with that Tontine Holdings. Everyone put a lot of faith in him, and it has absolutely blown up. And so he's a trader of extreme commitment, but he still lost a lot of money. And so this is why the more I do technical analysis-based trading, the more I see the innate value in setups like this as opposed to having a fundamental thesis. Yes, I said it. I think fundamental analysis, at least right now, is useless. One of these days when present value, was it net present value or discounted future cash flows become something that stock valuations are actually based upon, then I may reconsider it. When PE ratios matter, I'll come back and I'll start looking at maybe some balance sheets to find trades. But getting on base, getting into a trade and making it a winner, making it so that you don't care about it anymore, that is valuable. That's what makes money. That's what makes money for me. I just don't see any value in it. And I see a lot of folly in having a fundamental bias. And here's a perfect example. But the people that are already biased bullish, they think that they have some kind of great wisdom. It's just working for you right now. But even if you weren't, the key is, I believe, to be dispassionate and look for I had a message come across TradingView today where it's like, what do you look for? How do you know when it's a good time to trade? That was the question. They showed me a chart of how they had drawn up a lot of levels on. I'm not going to bring it up because I like to keep that stuff confidential. But they had drawn all kinds of levels, trying to really understand what's going on right now in Bitcoin. They drew, I'll take off my indicators. They had lots of levels where they said, okay, here's support, here's resistance, here's we had a breakout. Just really trying to understand and make sense of this. You can't. This is very choppy price action, especially on this time frame. This is why you have to take a step back to the higher time frame. This is why when I'm talking about this being a level, you can base that on the daily retracement level. But if you're digging down the weeds, you're just not going to see it. But they asked me that, and I told them, you need to trade only when there's opportunity. And he said, well, how do you find opportunity? It's ways like this. My way is looking for those volatility spikes. My way is looking for it to coming down to 50% retracements. You can do it with a moving average cross. A lot of people do a lot of good things with just moving average crosses. But then you have to be disciplined to only come and trade something when you have that signal. That's really the key. That's why a lot of people fail. They have their thing that they like, but they don't trust it, or they don't take every single opportunity that comes along. Again, it comes back to being dispassionate and looking for something, a technical setup that you believe in, and then executing it without ego. If you figure out how to do that, let me know. Maybe I could learn something. By the way, if you have any questions, make sure that you just put them in the chat room, either on YouTube, which I'm streaming on. I actually have a few on, let me read the chat right now on TradingView. I follow ETHUSD. I swear that this is from the chat. I swear that it spikes every Friday. after the market close. It's doing it right now again. That's a good observation. That in itself could be a tradable signal. I like it. I don't discount anything. The whole key to trading, whether it is fundamental or technical analysis, it really comes down to pattern recognition. You're looking for something that has happened before to happen again, because the markets change, the instruments change, but people's human nature changes. And for some reason, I guess when people across the world, the market closes, they can't day trade their YOLO options anymore. What do? They start trading Bitcoin over the weekend. I'll have you know, I really discourage people from trading on the weekends. I do. I know that's a shock to a lot of folks, but I think that the fact that the stock market closes at the end of the day, as well as for the weekend, is a feature, not a bug. You need that break. And that comes from my own personal experience, sitting there up all night, looking at a chart of Bitcoin on the 5-minute at 4 a.m. No, just don't do it. You're not that's not just you're not going to make enough money to make up for your lost sleep. Far better is it to go to bed, get good sleep, come in the next day with a fresh mind and find another opportunity. I don't think I can think of a time where that worked out for me, where I stayed up watching and that was the right thing to do. No, you have to take a break. And so I really discourage people from trading on the weekends. But if you want to enter a trade on Friday because you have it as a pattern that you like, not going to stop you. That's you. I'm talking about me. So what else we got going on? Okay. So we'll finish up with trade reviews. Let me go back to how I do like to take on my fundamental bias for, say, a stock. And let's say that I want to own a stock. Again, at the back end of it, I'm not going to get married to the stock. I'm going to be as dispassionate as possible. But that doesn't mean that I can't have a fundamental bias for something. I can't take on a bullish thesis on, let's say, a stock or a cryptocurrency. There's nothing wrong with that. But you have to wrap your trading ideas around risk-defined entries. That's what I want people to start doing, and I think it's going to save a lot of headache. An example is Delta. And I've been traveling a lot over the last month, and I realized, as I'm always flying Delta, that I like to fly Delta because I flew Spirit Airlines once. Never again. I'm a 6'3" guy. Like my femur, my leg, physically does not fit in the seats, and there is no, as far as I know, there's no better option there. So trying to save a little bit of money on flight, no, not worth it. Delta is right there in the middle of the road. It's value for what you get. I don't necessarily want to own airline companies. I think Warren Buffett learned that, but it's a company that I use and I'm going to keep using whenever I fly. That's a decision I've already made. So then what do I need to do to express that thesis? Well, the day it came to me, I'm not just going to go buy a bunch of stock and then hope it does well, because I haven't wrapped it around any sort of risk definition. So what I'm going to do is something like this. I'm just going to walk through the process. Remember, I'm looking for the spikes and also retracement levels. And so what I've seen here with Delta is that it has come back to a level. And the formation of this level is really, very simply, it is the big COVID drop. It broke above it, beat it back in December of this year, and it has come back again to retest it. And now you have this little section here where price action is starting to really fluctuate. It's not really telling you which way it's going to go, but it's revealed itself to you. And so whether I liked Delta a year ago or I liked it now I've got something to go on. Now I've got some kind of a technical foundation for a trade to start and express my thesis. We already have 3 bottoms here. I don't even need my spike indicator to tell me that we've had some volatility here. It's already defining it for me. So we can just take that off. We can make things very simple. This is the level that I'm trying to play. It's basically this range right here. And so if price drops below these lows, it could come back, but it might not. Here's a stock that I really liked, that I wanted to own. Campbell Soup. I think I talked about this in a live stream before. I like this trade. Same sort of setup. I even have it marked up here, so I know I talked about it. Boom, boom, boom. A clear level at 44.82. I got into it, and it broke the level. And I got out because it's breaking these lows right here. I like the company. I want to own the stock. But it violated my trade. Now, I could be a fundamental trader and I could say, well, I like the company. I like all this kind of other stuff, blah, 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 blah. I want to own it. I like drinking, whatever. I could say that. And then I could, in one of the biggest bull markets in history, be down, well, as of yesterday, almost 10% of my money. That's unacceptable to me. That's unacceptable. It may come back, but my money was better off in other opportunities during these few weeks where it's just been dying on the vine. When this can has been going bad. There's a hole in it and it got some botulism. I don't know what's going on. I don't know what the fundamental reason it's going down. I just know that it violated the level and I'm out. Took a loss. It's okay. And so going back to Delta, the way I look at this, I know where my stop needs to be. Even if I went in on today and we had our stop down here, my risk is defined. I can look to take off a little bit of profit at these highs right here when it retests the highs, if it does. Could take as long as it needs to. Maybe you buy shares, which I'd recommend. No, excuse me. Not recommending you buy or sell any. I'm saying as opposed to some weekly option or something like that. I would prefer you take a long-term perspective, either shares or a long-term option, something that's going to take you out through 2022 because this is a daily chart. It may take a while to play out, but you know where you're wrong. And from there, this can be a long-term trade that could happen for years and however long that you're flying this company and liking this company. But you're able here to size your trade appropriately. That's about an 11% down move right there that you're giving it. So let's say that you wanted to only allocate of your total portfolio a 5% loss. So in other words, you have $1,000 in your account and you only want to lose, what is it? Is that 50? Math. Yes. Yes, because 500 would be half. You only want to lose $50. Okay, so the difference here from the entry to the stop is about 4.67. So $50 divided by 4.67. That's 10 shares that you want to take. So we're going to round down because we're going to be risk averse. And so you now could own 10 shares. And the worst, hopefully, that's going to happen is you maybe lose $50. But now you've sized it appropriately. Whereas if this thing goes and continues and pays you out, well, once they stop paying their dividend. Once it keeps going up, now you're able to capture that, and it's all risk adjusted for your portfolio. That's the way I want people to think. I want people to get away from these YOLO. I like the company, so I'm going to buy a call. I'm going to buy a lottery ticket. Think in these terms. Risk-defined entries. Go back to the chat here. Okay, yeah, we'll talk about JPAL because I did put that as the image here. What about the BTC live chart, sir? Going back to Bitcoin, what we were looking at, if you go back and look at the beginning, I don't know when you joined Aki, but that happened yesterday. That the dip was yesterday. Right now, you're catching it late. I will look at that. I mean, just to do a quick recap on the way I would look at this, what I was looking at here, if I was looking at a trading setup, it was here. It was yesterday around 10 a.m. Eastern, or pretty much all through the day. You had an opportunity to get in on this dip. At this point, with this much risk, it would have given you a 3-to-1 here. You'd be taking profit. You'd be taking some profit right now on this particular setup. So no, you can't enter here. Sorry. You got to wait for the next opportunity. There will be. The market's always open. But in my rules, in my looking for setups and considering opportunity, it already happened. Oh, well. The reason I trust is because this thing happens a lot. Just wait. You'll get another opportunity. So, what about JPAL? Well, let's see. Let me take off some of these indicators and stuff. Well, this is Treasury bond futures. Best extension of what we're doing. Obviously, nothing really happened in the Jackson Hole meeting. I'm still living in the before times of before COVID. I said to somebody that it was a $1 million meetup. We're used to in years past. They would go down to Jackson Hole and have drinks and talk about the economy, but now they do it with a Zoom call. Ooh, that sounds really boring. So I don't expect anything to really happen, really, because anything that Jerome Powell would say that would insinuate that there's going to be a tapering, or the tapering that everyone's talking about, anything that he would say that insinuated it was coming would spook the market and lead to trillions of dollars in market cap being lost in a few minutes. I don't envy his position of trying to manage the economy and people's expectations with everyone hanging on his every word for how the economy is going to go. A lot of people are aware, I think just about everyone now is aware of the effects of inflation. We see it in food prices. I think I'm paying twice as much for steak as I was a year ago. House prices. A lot of things are not included in the inflation metrics. I'm going to say this. As many people are concerned and worried about inflation right now, it's on everyone's mind. Everyone is convinced that inflation is here. It's going up. It's much larger than 2%. Probably is. I do believe it is. Jerome Powell and the Fed's thesis is that it is transitory. What we're seeing is supply chain disruptions creating inefficiencies in goods and services. There's a lot of people not working, having trouble hiring people. That's creating a lot of inflation. I think it's probably a lot of things. But if I'm going to be contrarian, I would say that counter to what people believe, maybe the Fed is actually doing a good job. Maybe the fact that we can go and buy food, the fact that gas prices, well, depending on where you are, they're more expensive than they were in the past, but we can still drive from place to place, that we can still enjoy Netflix for, $15, $14 a month on our giant 80-inch screen TV that cost us less than $1,000. Maybe since all these pleasures and comforts of the civilized world are still available to us, that this great experiment of capitalism is still doing pretty well. And I think it's at people's detriment. And like I said, I'm being contrarian about this because a lot of people, they want to talk about how things are just going to go to crap and the economy is going to collapse and stuff. But that's not what the market's pricing in. The stock market's forward looking. It's wrong. It's obviously wrong when the market crashes. But the market is pricing in things being okay. That's just my contrarian stance on it. So, had some discussion this week. Had some discussion this week about the Chinese stocks. A lot of people have been looking at Chinese stocks for opportunity, especially. This is the, by the way, the Shanghai Composite Index. It's 0.0001. 5 zeros and 1. Man, Baba. Oof. That's a big oof. I think another one that came across the Discord was a KWeb. Internet ETF. This is all the tech stocks in China. Man, U.S. tech stocks and versus Chinese tech stocks, big difference. A lot of people, I think, want to buy this dip. They want to look for opportunity in China, but here's just my opinion. I've been watching, the Chinese stock market for a while. I mean, all through my career. And it is just not some place I put much confidence in because of the manipulation. I mean, this is the Chinese stock market index going back to 2003 here. That's just kind of brutal. I mean, I pulled this Wikipedia up right here because this is what stuck in my mind. When you trade for several years, you remember these major events. You that I'm speaking to, the listener, if you just started trading within the last few years, 2020 is going to be something that's going to stick in your mind. 10 years from now, when you're trading the markets, you're going to remember what happened in 2020. I guarantee it. And it's going to influence a lot of what you do because it's just wisdom. It's wisdom, and it'll help you. So whatever you're facing, whatever losses or whatever gains you're facing right now, it's shaping you to be a better trader tomorrow. I promise you. And so I remember this happening, and here was the key. So the Chinese stock market, had been closed to outside investment. And one of the things that they did, here's the key. In the year leading up to the turbulence, 2015, encouraged by state-owned media, enthusiastic individual investors, regular Joes, or I don't know, regular Jins, or whatever is a Chinese name, individual. I don't think you are, Jen. Actually, I don't know what you are, but enthusiastic individual investors inflated the stock market bubble through mass amounts of investment in stocks, often using borrowed money leverage, exceeding the rate of economic growth and profits. And then it all came crashing down. It got pumped by Chinese state media, the People's Bank of China, the party. And then when it all came crashing down, the Chinese government came in and they tried to stop it by banning short selling, by threatening to arrest people that were hedging against it. So if anything happens in the Chinese stock market, it's going to be under the direction of the party, of the Chinese Communist Party. I mean, it's sort of capitalist over there, but it's really not. It's still a hybrid economy between capitalism and a command economy. That's what they have going on over there. And to toot my horn just a little bit, but last year when people were losing a little bit of money at the top, this was in November, when Baba the Ant IPO was happening, which it failed. November, when there was a lot of bullish momentum, a lot of bullish sentiment for Alibaba, because of this Ant IPO, which they own a stake in. Ant was the finance company. I'm forgetting what it is that Jack. My memory is horrible. Was it Jack Ma? Jack Ma. He also owned Ant. It was some kind of financial service company, and they were going to go public. And in the days before it, people, not the people Bank of China, but the party, this Communist Party, said no. It's partly because Jack Ma had been getting a little too chatty about what he thought about the party, and he's been very quiet now because he doesn't want to get non-personed. But since then, it's just been downhill for it, and it's all because, well, the catalyst was that failure of the anti-IPO. It killed the bullish momentum, and it's from the Chinese Communist Party. And so I kind of did a little tongue-in-cheek of why it fell, drawing some really complicated, fancy chart technical analysis to illustrate to people why Baba was failing. And yeah, that's the reason. And so going back to the Chinese stock index as a whole, or Chinese stocks, I just think that there's better I don't see any unique opportunity in Chinese stocks. There's plenty of opportunities in U.S. companies. There's plenty of opportunities in other international stocks. But what I do see is unique risk in Chinese stocks. Nothing special about them to make money. There's no special opportunity. There's just special risk that I can't control for. And so that's why they just don't interest me that much. Even though I do think that China, slowly and surely, is gaining world economic market share. It's just really hard, and they made it deliberately hard to invest in China. They do a lot of shady stuff. To bring it back to Bitcoin, conspiracy theory in me says, I don't think it's an accident that China banned Bitcoin right around the time of the drop a few months ago. I mean, that was when they basically banned mining in that same week. Conspiracy alert. There's people that made money in this drop, and I think they knew what the Chinese were going to announce. Conspiracy. I think it plays into that. So we're coming up on the hour here. So if you have any questions, any comments that you want me to look at before I say good weekend to everyone, let me know. I actually had a lot that I wanted to take a look at this week. Let's take a look at a few. I think I've talked about PGNY. Talk about this because this ended up being pretty good. I've been in this stock since right around here, the summer, I think June of last year. I was very pleased that it came up to here. This is a company that I like. The fundamental thesis in this is what the company does is they are a fertility company that already has a lot of contracts with Fortune 500 companies for putting into compensation packages of their employees, like female, or I guess male maybe, but female executives that want to focus on career and freeze eggs. This is what they do. And so a lot of companies are offering this as incentives to packages to get female executives to stay, forego motherhood, and work for them. And they have a lot of deals. They have a moat around this industry for selling this service. And so when this company had a really nice pullback from this big impulse right here, I really, really liked it to add to the investment. I also took on trades in accounts where I did not have it. And so it gave me a little bit of discomfort in the fact that it broke below the level, but so far it's working out pretty well. So I took some profit today because it was just very, very bullish. And now I'm at a size on these new positions that I like. I'm comfortable with. I can sleep at night, let it go for the weekend. I wanted to take profit on this before the weekend so that I didn't worry about it. I could have a good weekend. So that was PGNY. See another one that I think I took a little bit in. This was UNH, and I post 99% of these things in Discord, by the way, even the ones that lose. Yeah, because I did have. Let's see, what did LMT do? See, LMT is one where I kind of paper handed it because it came down to this level. I'm already out of this one, but I'm okay with that because what I don't want to see is a situation like CPB where this thing just keeps going against me without stopping. That's why I paper hand things. And you know what? Maybe I like Lockheed Martin. I actually own it in my long term. I've owned it for many, many years. This was a new trade. That's okay. I may look to re-enter because I think there's still a lot of room to come up to the high right here. And if one wanted to re-enter, they could perhaps look at it, and now you know where your stop needs to be. So you can actually potentially do better than I can because it has now revealed itself. So that's another one that I'm watching right now that have pulled back to a 50% level. EQR is another one. And this is a little more shorter term. Let's look at this on a 2 hour to see that level. Yeah. So this is another one that also pulled back to a 50% level, and it could be going up to retest the high. So these are some of the ones that have pulled back in the last few weeks that I haven't talked about on live streams that I like. Yeah. I was going to talk about put credit spreads, but we'll save that till next week. One last question. What do I think about Penn moving forward? Penn Gaming. I think I was in this. So here's what I like about this. Yeah, I knew I liked this actually. Let me take a wider perspective. Yeah, okay, so I've already drawn this up right here. Again, good question. This is going back to the 50% levels. You have this from the COVID low up to its, yeah, it's probably the all-time high of this right here, a really nice and clean pullback. And it matched up with this price action right here. And it definitely messed around for the better part of this right here. But here, earnings gave you a moment of volatility that would have allowed you to structure a risk-defined trade. This is what I liked about Penn. Thank you for reminding me. You had this earnings right here, which broke this last low. I'm going to take off the secondaries here real quick to make it clean. I like my primaries. Ask me in the Discord if you want more information. This was the low that it made prior to earnings, and boom, it had a little small spike down right here to trick some people out, to stop out some people, and then boom, within this day, up it comes and sets up one of these volatility spikes that I like. And so the entry is going to be on this red line right here because that's the halfway point of this consolidation. And so how you could define a trade around this is like such. You know where your stop needs to be, right below that low. Your 3-to-1 is right up here. It's not there yet. But the beauty of this is if we go out to a higher time frame, you're going to be looking for this thing to retest the high. You just absolutely are. And so even before the high, you can capture that 3-to-1, take some profit, maybe cut it in half, cut it even more, where you now have a position size trade going on that you can leave alone and not worry about the day-to-day volatility. But with that amount of risk that you gave it right there, let's just say you're being conservative and you wanted to say, okay, well, I don't want to take the high itself. Let's look for maybe just this area right in here. Let's just say my target needs to be somewhere I feel like it here. Well, then you can still take a really, really good reward up to here, 6-to-1. That's great. That's great. So On the long term, I think PEN, as long as it holds and does not break 59.92, is a very good trade. I like it. I like it a lot. But do not get married to it. I know a lot of people got married to this last year when it's going up. But this pullback right here, this is the kind of thing I want to see. And then here is that trigger that lets you define your risk and enter on something you want to be in. Yeah. I was going to talk about it then. This is what I'll follow up with and how I use this indicator. Let's say that I wanted to be in PEN gaming and I missed this opportunity, but I wanted to catch it on the next one of these spikes that potentially happen. Now, as you see, not every spike works. This is why you have to have a real thesis going into it, and you have to look at trades at levels. So just note that if you do use this indicator, it's not everyone's going to work. That's trading. But you have to go into it when these spikes occur at key levels. That's the magic of it. And what you can do is simply this. If you have the indicator on your chart, what I do is I go up and I create an alert. The condition you're going to change to the name of the indicator, once per the bar close. And if you want to give yourself an extra note, I want to own this. This can be a recurring alert that will trigger you, will come up in TradingView and tell you, hey, this thing's happened. You can do this with a lot of indicators on TradingView, moving average crosses and all that sort of thing. Set alerts for these things to happen. TradingView is an awesome tool for this. So I hope you all are using these kind of features. And if you don't have enough alerts because you don't have a paid account, what are you doing? Are you really trying to make money trading? Come on, it's a business expense.